How is the Ukrainian crisis going to affect crypto? Are we headed into a bear market? What can we expect? Hello, I'm Crypto Casey, and in this quick video, we are going to explore my initial thoughts about how Russia's declaration of war on Ukraine could affect the cryptocurrency markets in the short term. If you're interested in seeing more content like my thoughts on how current events could affect the crypto markets, please let me know by liking this video, subscribing to my channel, and clicking the bell notification to stay up to date on all my latest videos. There is rampant scamming activity happening in the finance and crypto space right now, with people and bots creating duplicate social media accounts of influencers and educators like myself in the financial space. The only official accounts I have are listed in the description area of these videos. Anything not listed in the description area of these videos is 100% a scam. I will never direct message you. I will never ask you for money or crypto. I will never ask you to install profit generating or mining software on your computer or anything remotely similar. So only use the links in the description area to access my only official profiles. And please make sure to report any other scam profiles that try to follow you and message you, because their only goal is to steal your money and your crypto. So stay vigilant in these crazy times, crypto fam. Awesome, let's make some wild random guesses about how Russia's invasion into Ukraine could affect the crypto markets in the short term. My heart goes out to everyone and their families and friends in the Ukraine during this terrifying and horrible situation. My video editor, who's edited all of the videos on this channel for the past several years, lives in Kiev with her family. Fortunately, she is out of the country and safe, and she wanted to share this link to the largest foundation for anyone who wishes to show support for the Ukrainian army. You can access the correct and official link by scrolling down to the description area below. Okay, so as we've discussed on this channel in previous videos for the past several months, since big institutions account for over 70% of trading volume in the cryptocurrency markets, we are at the mercy of Wall Street price-wise in the short term. This means cryptocurrencies will perform similarly to on-risk stocks in the traditional market, like tech stocks. So when an extremely negative event happens, like the Ukraine crisis, this creates a lot of uncertainty in the market. Uncertainty in the market causes institutional investors and traders to get out of positions they view as high risk, like Bitcoin and tech stocks, and seek safety in more stable options like gold and cash. Since the US dollar is still the world's reserve currency, it is viewed as the strongest, most ideal form of fiat to hold in times of uncertainty. And, like we've seen in the past, war equals a stronger US dollar, which we can see now in a flight to safety following the news break about Russia's attack on Ukraine. We also saw a rally in gold briefly amid the initial turmoil in Ukraine, as well as a dump in cryptocurrencies. However, following President Biden's address to the United States, we saw some euphoria in the market. As Bitcoin rallied, the traditional stock market rallied, gold dumped, and it was just a bit strange. So here are a couple thoughts I have about the situation and what we may experience in the short term. Again, these are all just my random wild guesses, and I welcome discussion, opposition, agreement, or any other random wild guesses you all may have about the situation in the comments below. Why the market rallied? I think the market rallied after Biden's address for two reasons. One, although Biden shared that extremely strict sanctions are on the table as punishment for Russia's behavior, both his reluctance to execute a swift ban on Russia and his mention of waiting a month or so to assess how Russia reacts to the threat of extremely strict sanctions caused the market to rally. Why is it so? Well, the long and short is that if Biden had immediately executed a swift ban on Russia, it would have instantly shut down the entire country's ability to transact money via the banking system, which could have caused massive contagion effects across the entire globe. Russia is a critical player in the global energy market, and cutting off the ability for countries to trade those goods and services would have definitely freaked out the markets and caused some significant downward movement, if not an all-out nasty crash. And the fact that Biden said they would wait a month or so before taking further action on Russia, basically the market interpreted that as the implementation of sanctions or a potential swift ban are not going to rock the market for at least that certain time period, a month or so. At the end of the day, this serves as some short-term certainty in the market in the midst of a lot of uncertainty. And here's an interesting wrinkle to think about. If the world is threatening to shut off Russia's ability to transact in the traditional centralized global banking system, they would probably, absolutely, turn to newer decentralized systems to transact, like cryptocurrencies, like Bitcoin. Like we've discussed before, humans make up ecosystems, and humanity consists of good and bad characters. So as ecosystems exist and grow in both the traditional sense and on the blockchain, we can fully expect good and bad players to be a part of those ecosystems. And two, the second reason I think the market rallied is we've got an impending March 16th D-Day of sorts on the horizon, which is when the Federal Reserve plans to execute their interest rate hike. The markets have been afraid of a higher, more aggressive interest rate hike by the Fed in an attempt to curb inflation. But now with Russia's mobilization of forces into Ukraine, with the intentions of probably spreading further into other countries, the markets are assuming the Fed will institute a softer, less severe interest rate hike, or maybe even kick the can down the road yet again. So what does this mean for the crypto markets? Well, we will continue to be at the mercy of Wall Street uncertainty, manipulation, and geopolitical events like Russia's attack on Ukraine. And in the short term, with fears about interest rate hikes decreasing, and Biden's intention to wait a month or so before taking further action against Russia, it's looking like we will have choppy sideways movements and maybe, probably some rallies up, coupled with maybe, probably some crashes down. So as usual, it's anybody's guess what the crypto markets will do in the short term. However, long term, a lot of this tech is just inevitable. At the end of the day, as we discuss in most videos on this channel, if you're interested in investing in cryptocurrency for the long term, meaning over a year and more ideally 5+ years from now, DCAing or dollar cost averaging is the best strategy. Dollar cost averaging involves investing a certain amount of money at a certain frequency, no matter what the price is, like buying $10 worth of Bitcoin every Monday. Either way, leading up to the mid-March interest rate hike is the main driver of both the traditional and the crypto markets right now. So it's anybody's guess what will happen until then. Hopefully following that, we will be out of the woods for a while. We shall see. Awesome. Thank you so much for taking the time to watch this short video. If you enjoyed it, please make sure to like this video and subscribe to my channel for more crypto content. So have you or your family or friends been directly affected by the Ukrainian crisis? What do you think about the market's reaction so far? What are your short-term price predictions? Let me know in the comments below. Be safe out there.